Hi there, a very good morning, good afternoon to all of you, depending on wherever you're watching me. This is Simply Stocks, and I'm here with another video. And this time, this video corresponds to Dixon Technology, a detailed discussion on the results and how the stock is behaving, what lies ahead, what is the projection of the company management. I'll discuss everything in this video. So let's get started. First of all, a disclaimer that this is not a stock recommendation. I'm not a member of the NSE and BSC. Whatever I discuss here is purely on the basis of my experience into the market over the last 10-12 years. So kindly do consult your financial advisor before taking any decision on my calls. Now, before I talk about Dixon Tech, here's a small request. Can you support me on Patreon? And you can be a member on Patreon, WhatsApp, or on YouTube. So you can click that join button. You can become a member. You have access to my portfolio watch list and a number of podcasts on different issues like global and local economies, discussions on different companies, etc. So you get all of that. Plus, any queries that you are having, I'll be more than happy to answer that. Now, in order to discuss about Dixon Tech, let me take you to the screener website. So this is about Dixon Technology. Uh, Basically, the company has been doing extremely well in terms of their numbers and performance, but the stock has fallen down. So we'll discuss in detail as to why the stock has fallen down and what is going on with it. So I'll use stock edge and screener to discuss everything in here. uh, so a 90,000 crore market cap company. It has grown a lot over the last 7-8 years, since 2017-18, since its inception, or since its you can say IPO, that the IPO that came in. The stock has grown by leaps and bounds. From around 500 rupees, the stock has now grown to around 15,000. It's a 30x over this 6-7 year period. Now, the point here being that how has this come to being, and how has been the results this time around, and why the stock has fallen post results even after producing very good results. So we all know that Dixon Tech is into the manufacturing and services of you can say electronic products, be it mobile phones, be it any kind of electronics like set-top boxes, and there are chipsets, there are lighting products, etc. But their major portion of their business comes from mobile phones, which is around 87-88% of their business. And mobile phone penetration in India has grown substantially over the last 5-6 years. In fact, high-end mobile phones, which is ranging from around 30,000 to 1 lakh rupees, has grown substantially. And what Dixon has done is that they have increased their clientele over time. The number of clientele has always increased. They are into home appliances as well, as I said, lighting products, etc. And if you look at it, smartphones 60 million is their capacity, which is going to increase even further. LED is around 7 million, refrigeration 1.2 million. There's also automatic washing machine, fully automatic washing machine, LED lamps, etc. Many other products are in there, and they are looking at expansion. The company has finalized the location of its display manufacturing unit in partnership with HKC, and this HKC division, or this HKC thing, or this tie-up would come into being in FY27, latter half of FY26, in big time. So we'll talk about this as well. This is also going to be big. Again, Q1, Q2, I think it's going to take place by Q3, Q4. It plans to set up a world-class display fab supporting its backward integration. They are big now going into backward integration, which is going to even swell their margins and revenue over a period of time. In terms of their JV and tie-up, they have gone into contract manufacturing agreement with Nexel India to manufacture smartphones for the iconic French tech brand Alcatel. So they're going to make, you can say, phones for Alcatel. In April 25, the company entered into a JV with Inventec Corporation to manufacture notebook PCs. So this is all they're big into it. In March 25, the company signed a 50-50 JV with Signify Innovations. In December 24, the company signed a JV with Vivo, and this Vivo Mobile India manufacturing thing will come big into its numbers in FY27. So you have Vivo, you have other things. So if I could just give you an idea, they're going to manufacture products for Vivo. They're going to do it for Motorola as well. In one or two interviews, they have not directly but indirectly talked about having Motorola on board. Not quite. It is not that it has come on board, but they are very close to signing a deal there. Plus, as I said, they have the HKC deal, which is going to get into revenue. So FY27, we expect could be big for Dixon. So why the fall at the moment with all this? So that is the projection for the next few, you can say, months to a year. But at the moment, what happened was, in terms of numbers, it delivered magnificently, but the valuations were stretched. So just to give you an idea on the numbers, the quarterly numbers, 10,300 crores were the numbers in the March quarter. 4,650 crores were in the last March quarter, a huge jump from 182 crores. The profits have jumped to 443 crores. And from, I think, June onwards, the point here is that quarterly growth in profitability, operating profit, may not be there. So on a quarter on quarter basis, the growth will not be there because June is not the quarter for Dixon. Majorly, their revenue comes in the second half of the year. That's one of the reasons. And if you look at the numbers, overall 4.3% is the operating profit margin. A disclaimer: I have the stock in my investment portfolios. Kindly take that on note. That's a disclaimer on my hand, that I have the stock in my portfolio. Other income was 265 crores. That swelled the profits, but I'll make it easy for you in terms of net profit as to how it was if we take out the extraordinary exceptional item of 250 crores. So 15 crores of other income was there. So overall what they did was 443 crores of operating profit, plus 15 crores of other income. And if I reduce the burden of interest and depreciation, then the overall profit was around 326 crores versus 130 crores, which is still a huge jump from last year in the same March quarter. And if you take 19%, or I'll take 22%, which was the last year's uh, figure on the tax front, then we are looking at 255 crores net profit versus 97 crores of net profit. Now that corresponds to around an EPS of around 36.5. So overall, if I take out the extraordinary part throughout in these two quarters, say in September, June, I think even in September and June they had other income in which there were exceptional items. Yes, it was in September. So what they have done is 129 rupees of EPS, not the EPS that you are seeing at the moment of around 180, 185 on the overall basis, 182 crores. What they have done is 129 rupees of EPS. And the stock, when the results came in, that was on, I think, May 20th, evening of May 20th. So if I take out the chart in here, on May 20th, the high was around 16,640. And just a day before, the stock was around 17,000. So if I take 17,000 with 129 rupees EPS, then you will be able to understand at 131, 132 rupees, let's say 131 rupees PE, or at a PE of 131, it is stretched. It is stretched because of what the management is talking about for the next couple of years. So I'll discuss that. But at 131 times, 132 times, the stock is extremely stretched. Where does the value lie? We'll discuss about this in a bit. But at the moment, I believe that at 131 times there had to be a correction, and that is exactly what happened. That from 131 times, if you look at the PE, it has gone down to 117. So it has already corrected by around 10% from those levels, 10-12%. And I believe there's more correction to come. We'll discuss this in a bit, but let's just go through the numbers once more. So overall in the quarter they did 4.3% of margin on the operating front. For the year they did 3.9% of margin, which is pretty decent. And as we look at the net profit, it's not actually 1233. So if I take 129 as the EPS, then we are looking at somewhere around 71% of this, which is 876, right? So 876 crores is your net profit this year. Now kindly remember this number. So now what we are going to do is we'll discuss about management commentary, and then we'll project the numbers for the next couple of years. That would help us understand as to what FY27 numbers could be. And do like the video and do subscribe to my channel if you want similar videos, and do write that you want projections for different companies, and those videos will get more views, and you are more interested about that. I'll do projections for some of the companies on weekends if that will be possible. So let's do some number crunching, and let's analyze what the management has talked about. We are going to discuss that. So what the management has talked about are a few things that I'm going to point out here. Number one is the outlook of the management is that they are going to do 40 to 45% revenue growth over the next 2 years. And they believe that for the next 2 years, 40 to 45% revenue growth is very much possible. In fact, for FY27, they believe that they are going to do much higher growth. So that means that the sales of around 39,000 crores could easily double to more than 80,000 crores by FY27. That's 2 years from now. Now, what lies the where does this confidence come from for the management? Is that the HKC tie-up for the products that would come into play in the second half of this year in FY26. Vivo, that thing that they had a tie-up with JV with Vivo, that would come into full effect in FY27 and start producing, you can say, numbers from the fourth quarter of FY26, which they believed was to happen, which the markets believed could have happened in probably second quarter of FY26, but that will happen in the fourth quarter of FY26. That was another reason why the stock has fallen. And another tie-up that they're going to announce, probably with Motorola, that's my understanding. Probably in the next 2 quarters, 4 5 months, they're going to announce that they are very close to finalizing a binding agreement with Motorola to produce their products as well. Now remember, they are producing phones for Xiaomi, and that is also a big thing for the company that they are producing for Xiaomi. And I believe that although Xiaomi sales have gone down, Apple sales have gone up, but going forward, things should pick up for Xiaomi as well as economy grows further. So this keeps happening, but as long as Dixon is acquiring more companies and brands, and they're looking at expanding their different lines of businesses, I think the growth should continue, and that is why the company is very confident of delivering around 80,000 crores of sales by FY27. So let's just project the numbers going forward. I believe that what will happen is, right now they have done 39,000 crores. Let me just think that they are going to do a 42% growth on this, so around 55,600 crores for next quarter. And they are going to do better than this, probably 60% on this, or something like that, because I have a feeling that all their businesses from HKC, Vivo, Motorola, etc., and other types that they have in the laptop domain as well, where they're producing notebooks, this will all come into picture in FY27. So the numbers could be pretty big. But let's say they're going to do around 85,000 crores or so, for the year in FY27. If they're going to do 85,000 crores, they are saying that 80,000 crores is very much possible. Let's say 85,000 crores they do for FY27. And this is the most important part. They are saying that the management is confident of delivering at least 80 to 90 basis point more in terms of margins. So they have done 3.9% margin for the year. I'm not taking 4.3% as the base case which they did in Q4. I'm taking for 3.9%, which is the yearly margins. In that sense, they are going to do around 4.8% at least margins. That's what we believe. So on 85,000 crores of sales at around 4.8% margins, we are looking at somewhere around 4,080, 4,100 crores of sales for the year for FY27. And if I take the other income, normal other income part to it, because they had another income which is normal of about let's say around 30 crores or so. So they did 30 crores. I would say they would do around 70 crores or so. So let's add that up. So 4170 in my opinion. In terms of interest and depreciation, overall they did 450 crores versus 240 crores. So that's a jump nearly pretty big. That's around 100%. Let's say that this figure of around 430 crores uh, jumps by around 50% each year for both the years. Let's say that happens. So around 950 crores, 940 crores. So we had around 4170 in terms of sales for FY27. 970 crores goes away for you can say depreciation, etc., and 22% goes away for your taxes. So around 2500 crores is what I believe they're going to do in terms of profitability at least. And this is a base case scenario. This is not a very bullish scenario for Dixon Technology. So I have a feeling that if I take current profits, which includes all the exceptionals and other income exceptionals and all, they're going to double their EPS. So EPS would be around 365 rupees or so. Based on that, the stock is trading at 15,000. If I take 365, around 41 times 2 year forward, it's trading at around 88, 87 times 1 year forward. It's relatively, I would say it's not ultra expensive, but it's reasonably priced. Now 365 rupees of EPS. Now how would the price be at that point of time? Will the stock be trading at 100 times, 120 times? What will happen? So for that you need to understand as to how the stock has behaved, or how the stock has behaved in terms of PE, in terms of valuations over the last 10 years. 10 years average PE for the company is around 104. So if I take that, only take that, so 365 into 104, we are looking at 38,000 on the stock in 2 years time for the stock, which is a pretty significant up move from current levels. But you take into effect one more thing, that in March of 25 they did around 39,000 crores in sales. They did around 1500 crores in profitability. Projected on that, on 1500 crores of operating profit, at around say 1 lakh crore was the market cap just recently. 10% higher. I'm not saying more than that, at 16,500. So based on that, we were looking at a scenario where it was trading at 66 times operating profit. Considering that the operating profit will be around 4,000 crores or so, I think the stock could have a market cap of 2 lakh 65,000 crores, and that is the, you can say, bullish scenario. In terms of bullish scenario, we are looking at somewhere around this. So we are looking at a price of around 44,000 or so. So somewhere between 38,000 to 44,000 is where the stock could be if this all transpires over the next couple of years. And that is why brokerages are pretty much altogether bullish on the stock, and giving targets of 20,000, 21,500. What I feel is a possibility is because of markets being slightly muted or going down. That's what I believe that could happen in June, and I'll discuss about the markets in another video. But I believe that there is a chance for a decline in the stock even from here on a shorter term basis. So what I feel is that at current valuations of 120 times, 117 times, there is a possibility of 10 to 15% decline from current levels, and the valuations of Dixon technology coming back to the median of 10 years, which is around 100, and that would be a, I in my opinion, a huge buying opportunity, because at around 80,000 crores you're getting a company at one time sales to year forward, which is very very reasonable for a company that is growing its sales at around 50% year on year for the next 2 3 years. And there has been one more issue of the PLI thing. I want to clarify that, because the management has come on record many times and talked about it, that the scale with which the company has grown, that at around they had a market cap around 3,000 crores when this all began. At around 3,000, 6,000, 10,000, 15,000 crore market cap, they believe that for a smaller company, very small company, PLI schemes and hand holding from the government, that's what the words of the management were, hand holding from the government is needed, and that is what the government had provided earlier. And now that they are 80, 90, 100,000 crore market cap company, they are very much self sufficient in probably going forward and expanding, and the numbers plus the projections and the JVs that they are signing are you can say testament to that, that they are going to grow even further from here. So I believe maximum 15% downside from here is very much possible. Somebody who doesn't have the company or stock should wait it out, wait for that correction, because if I look at the technical, if you look at it, this is how the chart looks like, and this is not a good looking chart altogether. If somebody is trading into the stock on a shorter term basis, you look at it, 17,000 was the high just before the results, and the stock has collapsed with heavy volumes. The volumes have been pretty big over the last 3 4 days, even with the markets not falling that much. The stock has gone from around 17,000 all the way to 14,800. That is a fall of around 2,200 points. Yes, and so that is around 13%. The stock has fallen 13%. If you, if I look at the Nifty per se, or even the mid cap index Nifty, look at the Nifty mid cap 100, is Dixon for sure would be part of it. If you look at it, it has gone nowhere in the last 3 days. So on 20th, the index was at 57,450, and now we are at 56,650. So it is down by around 1.5%. Dixon is down by around 12 13%. That is what has happened. So one needs to be extremely careful, because the market is not looking that great, that it is headed to new highs in the next 1 month. There could be some correction. Even a 5% correction may trigger a 7 8% correction in here, which will take the stock down below 14,000. And so if you look at it, 200 DMA is 14,200. Probably that would be a decent level to start accumulating the stock once again, and from there on in till 13,000, 12,500 would be very good levels to get into, because at that point of time, say around 13,500, the market cap would have gone down to around 80,000 crores, with sales projected to be more than 80,000 crores 2 years from now. That would be a very reasonable level. One thing I want to also point out, if you look at its market cap to sales, which is very interesting. So from a 10-year basis, its average is 2.1. Currently, the market cap to sales is around 2.3. So a 10% decline from here would be equivalent to the 10-year average market cap to sales for the company. And normally, a decent looking company, a larger mid cap or large cap company, that is producing decent results, good results. If they come to 10-year average numbers in terms of market cap to sales, in terms of PE, valuations altogether, with such good ROEs and all of 33, 34%, then that would signal a kind of a bottom from a 3 to 6 months perspective. Yes, the stock could go down another 10% from there, but around those levels, the valuations will become very attractive. So a 10-12% from here, the valuation should become attractive. I think at these levels it is slightly stretched, so any kind of up move could be sold into in the next month and a half or so. So that's my analysis in terms of valuations. I believe 13,500 to 13,000 levels would be very interesting to look at. Even around you can say even around you can say those times when the markets fell in April. The markets made a bottom, or the stock made a bottom at 12,200. But if you take out this anomaly of the major fall, then the low was around 13,000. So around 13,000, I feel that there is a base. There could be a 1,000 point decline even from there, but around between 14,500 to 13,000 would be very good levels to accumulate the stock. Start slowly, and probably at around 13,000 one can look at it buying big from those levels. So again, a disclaimer, I have the stock in my portfolio, so do take that on note. So this was a video on Dixon technology. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it. Kindly support me on Patreon. Do subscribe to my channel. The subscription level is extremely less. Whoever is watching, kindly do hit the subscribe button. Thank you.